All right, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is February 11th, 2025, year of our Lord, and we'll be reviewing the E-mini Dow, NASDAQ, and the S&P 500. Also discussing some of the moves I made on the day, some of the things that I was happy about, some of the things I was kind of salty about, right? Like, before we get started, I just want to say, like, trading is probably the hardest thing I've ever done, right? Because it's a battle of conquering yourself, right? Like, so it's really, really tough when you have these little tendencies as a person that don't really line up with your tendencies that you need to have as the trader that you're trying to be. So I know if you guys are out there, if you're struggling, or if you're, maybe even not struggling, because I'm honestly not struggling, right? But I'm struggling to be the trader that I want to be, that I see myself as, right? So I'll discuss some of those things. I'll get a little deeper into what I'm talking about, but let's first get over this pre-market plan. And as a matter of fact, let me take a quick screenshot of Jay Stills' pre-market plan for the S&P 500 as well. So I have that handy dandy. Let's go over here. Cool. 2 seconds. Boom. All right, cool. All right, so I got that there for when I'm ready to go over the S&P. Okay, so what were we in? The current conditions where we were in a bullish retracement of a bearish trend, right? We talked about, hey, as bearish as that daily candle looked, it didn't take out the high, but as long as this low from Sunday was intact, you essentially was looking at this low as being the low of the week, right? Potentially, right? Hypothetically. And then I was looking for the market to basically bring a higher low today. So as long as we stayed above the previous day low, and this, like I said, this candle stayed intact, I thought that there was a good opportunity for the market to trade higher on the day. Still kind of remaining range bound, understanding that we got that huge CPI news coming up, which, I mean, looking at the structure, it's probably just going to take us higher, to be honest, right? So current conditions, we're in a bullish retrace of a bearish trend. As long as we stay below 233, 45,233, we were bearish. So the closer we came up here, we'd be bearish. And we were bullish as long as we stayed above 43,962, right? 43,962, you can see was way, what was it? It was way down here, right? And we definitely stayed above that, right? So ultimately, it was the same plan as yesterday. We were in the same spot, looking for longs at the lows and shorts at the highs, right? So to start the day, we were at the low. So in my opinion, there was nothing to do but long the market, right? Like that's just me, like, sticking to my own plan and my own thesis, right? Other people can see the market however they want to see it, that's fine. But the simplest way I can define the way I look at the market is, the first question I always ask myself is, are we in premium or are we in discount? Would people want to buy here or would they want to sell here? And ultimately, if you're at the best price, if the goal is to get the best price, if we're at the high, that's the best price for sellers, right? If we're at the low, that's the best price for buyers. And that high and low is relative to wherever we are in price, right? So if we're in a range, but we're all the way at the high, doesn't matter. Inside of that range, what is premium and discount, right? You know that you're in premium on the higher time frame, but inside of that dealing range, there still has a premium and discount, right? So I just wanted to clarify that, for anybody that may be struggling with that. But our range at the high was between 44,608 and 44,531. 44,474 was the low through 44,406. Again, we were looking for bulls to step up at the NWOG at 421 through 421 through 367. I was looking to long the market, targeting the previous day high, which was 732. And you can see that so far, now the market's still open. It's got an hour and 39 minutes, but so far so good. I mean, exactly what I wrote down happened, and that's part of my frustration on the day. And I'll talk about it here in a minute, but you can see we tapped right into this NWOG, right? And we went right to the previous day high. It took 4, 8, almost 12 hours to get there, but it got there, right? But yeah, so the next area that I'd be looking for the market to tap into is this 4-hour resistance at 772 to 959. There's an hour and 30 minutes left in this candle, so strong possibility we get up there, right? To the extreme bullish plan, I was looking for buyers to defend this support zone. Price never came back here, and I said there was like a low probability to come back here because think about it, if you're buying the market, right, and everybody that's inside of this candle is underwater, why would you allow price to come back down here to let them out? It just doesn't make any sense, right? So all right, so bearish, the only place I was looking to be bearish was obviously inside the range if I saw an opportunity. And then there's two places. So 4-hour resistance at 772 through 967. I would just be looking to target, I said 4-hour support, but on the way to there, I'd be looking for like top of the range, weekly fib, in walk, that type of stuff, right? And then the extreme bearish plan was daily supply, which again, I just don't think the market wants to take these areas until they get the CPI news. So that's kind of why we're just ranging. We're ranging for a huge catalyst. I mean, we've been consolidating for almost a month, a little over a month now. So if I had to guess, the market's waiting on CPI to take us higher, which, I mean, let's be honest, right? I'm sure everybody's going to be shocked when CPI comes in good tomorrow, but I'm not really going to be shocked because just based off the structure, the market looks like it's ready to rally, right? So let's go down to the 15-minute. I'll talk about some of my pitfalls on the day, right? So my plan, right? My plan this morning, the thing was, okay, I'll just be transparent with you guys. I'm finishing up a 100K account, right? And anybody that knows me, 50K accounts is fine, whatever. I can pass them, no problem, right? 100K accounts, I don't know what it is, right? Like every time I get to about like 4,000, 5,000, whatever, right? I just start tweaking. Like I turn into this like extra conservative trader. Like I'll say what it is. I become very bitch made, right? And it's just not like me. I'm just not like that at all. But it's something about when I get to the finish line of a 100K account, right? Like I just can't get over the finish line. Like sometimes I take like a couple counts, I blow them, and then I end up going and finishing like the last one, right? So that's part of my dilemma, right? So, all right, I got you, Jay. So, all right. So that being said, this morning, my 100K account was at $4,300 or something like that. 4,600, something like that. I don't know. So of course, what did I do, right? Hang on a second. Somebody's calling me. All right. So of course, as soon as I got to the New York Open, I'm like, okay, I really don't want to lose money. And right there, that is the one thing you cannot come to the market saying to yourself, right? Like as a trader, by definition, you should be mentally prepared to lose money, right? So automatically I was in a shitty place. All right. So I ended up getting long this morning, right? Very nice entry. I mean, it was super saucy. Where'd I get long? I got long. We were coming down. Oh, it was on the 15-minute. Hang on. I know exactly where I got long. Okay, right here. Oh boy. Yeah, this is gonna be hard to go through. But anyway, I got long 44,436, right? And for some odd reason, I gave myself a 10-point stop. And I was like, all right, I just want to risk $55, right? Like, I even said it, which is something I'd never even tell the Discord members, like how much I'm risking. But I even said it in the chat. I was like, yeah, it's only a $55 risk. So if I lose, no big deal. And of course, it was a big deal when I lost, right? Like, of course it was, because I'm up 4,600. Like, I'm trying to pass the account today, right? Next trade. Of course, that was a loser, you could see. Next trade, entry. 44,418. Okay. No reason to panic here. Like zero. What does Hobbs do? Straight up freak out, cut the trade for 40 points, go to break even. Like I'm just doing shit that I don't do. My target was simply midnight price at 510. I was only looking for 100 points because I knew we was in a tight range. I couldn't hold, right? And I'm telling you guys this because like I know somebody else probably struggles with this that just don't talk about it, right? For me, For whatever reason, the 100K account, finishing them, getting to the end of them, it becomes my nemesis, right? To the point where I end up fucking just blowing up. I didn't today, so I'm proud of that, right? But then I went and traded micros, which is again something I just don't do, right? Because I was trying to conserve the 4,600. I ended up losing enough to drop it lower and just walked away. And I was just like, you know what? Let me just leave because I know where this route goes. Okay. Moral of the story is don't be scared, right? Like trade the way you trade. So I had a nice talk with some accountability partners or whatever. And you know, they basically put me back on the right path. They'd be like, dude, you could trade. You could kill this market. So who cares if you lose it? You can get it back. And I know I can get it back, especially if I got a $2,000-$3,000 cushion, right? Like I know I can get it back if it's not even a question. So don't be afraid to lose. Always trade your plan and damn sure give yourself, play the same way as you would when you're up, right? For some reason I turn into Superman when I'm down, right? Like if I'm down $2,000-$3,000 or $2,000 in a 100K, that next trade, I'm gonna put on max size. You know, I'm Superman. I kill that shit. So what I'm trying to do is come to the market like I'm down every day, right? And from now on, trade the same way I would trade as if this was my last trade on the day to save the account, which means that I trade completely fearless. I don't give a fuck. The shit gonna blow anyway, right? So the thought process should be for me moving forward. Fuck it, it's gonna blow anyway. You might as well blow it trying to be on top. You know, like that, even though that's not, you know, what I'm trying to do. I'm not trying to blow the account. I'm just trying to get in that mindset. So I wanted to share that before I went through the pre-market plan and all that stuff because the plan was saucy. But let's get right into it. So the end wall retest, we were looking for 423 through roughly about 363. We ended up getting the tap right at 44,396. That's why I was looking for longs here. I want to discuss this consolidation as well. Like if you ever see this consolidation, right, on your instrument, right, just measure it out, man. Like, look, there's about 1,000% chance that if we're consolidating at the low, the market's not going to leave. It's not going to do this from here, right? When I mean this, I mean it's not going to rally up out of this consolidation. It's like 105% chance the market's not going to do that. Before the market does this, right, it's going to chop down to a certain key level, preferably one that has stops over here at 405, right? So stop getting faked out inside of this little 73 point range. I got faked out once. I went to break even because I understood it when I went. Once I took the trade this morning, I think I was in like right here at 476. And once I took the trade, I started looking at it. I was like, man, I'm in consolidation. I was like, all right, I'm gonna just go to break even and take a shower. Right, I put my stop in profit. I got stopped out, and I was like, okay, now I know. Then I was talking to Pippi, and he was like, yo, like just pay attention to the consolidation more so than you pay attention to the entries. He said because if you can eliminate or learn how to trade the consolidation, so you can make money on the way inside the consolidation, and then when it dips, you understand what's happening. Me personally, I'd rather just stay out of it. If we in tight consolidation, I'd rather just wait to the liquidation, and preferably it happens inside of a macro, which this one did, and then take that liquidation. Essentially, you playing the liquidity sweep and not playing inside the range, right? So quickly identifying the range is key in that situation. Way you can identify it is just bring out your price range tool and stretch it out. I know the consolidation for my instrument is usually between 70 and 130 points. If we between 70 and 130 points, then I start looking to see if we broke any highs, broke any lows. And you can see that didn't happen. So we obviously are in consolidation, all right? So like I said, the target was previous day high on that trade. Market went right there. And like I said, we still got a little bit more time left in the day. So we could hit that second target as well, right? But if we go down to the macros, right? And we just follow price. Today was, again, another distracting day, right? Like the market has these days where everybody's focused on the fundamental aspect of the day. Tomorrow is going to be another one. Thursday is going to be another one. Everybody's going to be focused on CPI, focused on PPI. Today everybody was focused on Jerome Powell and what is he going to say? How is he going to dump the market? This market is so volatile or it's so tight. Bro, at the end of the day, the price action was the fucking same, right? You could go back and look at the last 5 fucking Tuesdays inside of this range. Monday and Tuesday, the last 5 weeks, go back and just study it, right? What you will see is on Monday, we had a ridiculous dip down to the downside, whether it be during the Tokyo, Sydney, or London session, and then sometimes New York. Monday, we got a huge dip to the downside. We then bought that dip back up, followed by a push up on Monday, or a crazy rally, a dip down on Tuesday, back into that area or somewhere near it, or within 50%, consolidation, and then rally the next day. And then Wednesday, more rallying. Thursday, we turned around. Friday, more rallying. Or sometimes a aggressive pullback on Friday. But if you look at the last 5 weeks, I promise you, on the 15-minute chart, because I've done it, if you just look at the last 4 or 5 weeks, the market has been delivering the same way, right? Even though we've all been Trump this, Jerome Powell this, Tesla this, Elon Musk this, who gives a shit, right? At the end of the day, how can you make money? And if you want to know how to make money, figure out what price is doing, right? Fundamentals will play a part on how long you think the market can go in that direction, for sure. Not dissing them. I'm just saying don't allow them to be your primary focus, all right? So anyway, we trade down into 929.30, get the nice rally up. This consolidation is where I sold my position for, I don't even know why. Like I just looking it back at this, I'm like, bro, why did you sell right here? Like there's no reason. Consolidation, we're trying to go higher. So in consolidation, you should anticipate a liquidation, which is perfect. One, we're inside of the 950-1010 macro, so I wanted to trade down. Two, we've already placed a new high above this consolidation here, which means if we come down, as long as we don't break this low, I should be adding more to my position because that's a double bottom. That's easy money. That's an easy kill, right? I didn't kill it, not at all, right? I missed this entire fucking move, right? And I just got up and walked away like a little sourpuss. I'm not even gonna cap. Like I was hurt. Like I called Justin and told him like I damn near wanted to quit, right? Like that's how hurt I was. And I know it wasn't that serious because again, I made money on the day, but I was in pain because I'm trying very, very hard to be efficient as a trader. And to me, I don't view getting 40 points as being efficient for me as a trader, right? For me, not for anybody else. I'm talking about for me, okay? Anyway, we trade down into 1025. 1037 probably brought the low of the day, and it did. Okay. The higher low, rather. We rallied up, got this nice little push off 1 p.m., and now we're pushing up to make 1 p.m. the low once again, 3 p.m. the high once again, which is an indication that we're probably going to be trading higher. So I would anticipate the market not really coming back down at all, to be honest. Like usually I went back and looked at the last few CPIs. Whenever we get this type of rally at the end of the day on Tuesday, the market it may dip back down and just consolidated these highs. And then it'll just be waiting on CPI and then it just goes extra high, right? So, I mean, if you don't believe me, here I'll go to the 15-minute chart. I'll show you the last CPI candle. I still have it marked on my chart. Let me turn these macros off so it's not all sloppy. All right. So this is the last CPI candle. Hang on. I'm gonna go to, it's lagging a little bit. Let's see. Oh, here we go. January 15th, 2025, right? Go back and check that date on your particular instrument and you'll see, look, just like I said, this is Monday's price action, but this is Friday going into Monday. Monday, we didn't get the dip because we were already in discount, right? So we were down here on Monday. We rallied aggressively. On Tuesday, we came back down, put the higher low in, right? Rallied up, was struggling to get above highs, finally closed above the highs. At 1800, all we did was consolidate the highs. And guess what? I guarantee there's 1,000 people, oh, we're consolidating the highs. We're going to go short. All right. Okay. Market pushes back up above the weekly, and then CPI candle comes in, and it's go time, right? And then the rest of the price action was absolute trash that day, honestly. But anyway, I just wanted to share that with you guys. I'll go over to the S&P 500 now and review the price action over there. Before we do, we'll pull up Jay Seals' plan on the day. He says, overnight, we sold off from the New York highs. And since 2 a.m., we have been consolidating above 62.50, which meant we were consolidating for about 4 hours, right? 4 or 5 or 7 hours. Where we did find some support, he said, I will remain bullish as long as we are above 62.50 and bearish below. If we can continue to hold above 60, 62.50 and we break above 76.75, I want to look for longs on a pullback targeting previous day high first, and then 1 hour supply at 6109.25. If we get below 62.25 with strong selling, I want to look for a retest or a lower high to be put in. So below 60.62, bearish, above 60.62, bullish, right? So if we look where 60.62 was, this is 60.62 right here. You can see the market swept 60.62, and then that was an easy kill, right? Like it was easy money, right? Not sure if Jay took this trade or not. I don't think he did. I think, yeah, no, he didn't, because I remember he called me. He was like, "I'm so mad at myself." I was like, "What?" He's like, "I didn't follow my plan." He actually tried to short this coming out of here. So it'd be like that sometime, right? Sometimes you see all of this bearish activity at the lows. You see this sweep. And then as soon as you see this sweep, you're trying to limit order executed. Oh, I had a limit on NQ. Oh shoot. Hopefully that works out. But you see all of this selling come in, and then as soon as you see this sweep, you're like, all right, I'm going short, because he said bearish below 62. But again, 62 doesn't mean if it holds, right? If it breaks it and then comes right back up, that's a hold. That's not a breakdown, right? So 60.62 held, and then price pushed right to the previous. Oh my God, he's gonna be pissed when he go back and watch this. Price pushed from 60.62 straight to the previous day high at 60.96. We first got a pullback into the PM session low. Chessboard gang stand up. 60.72 held, got a higher low placed at 60.75, pushed right to the top of the chessboard, and previous day high struck again. So again, the S&P 500, very, very clean. Getting above previous day high is very important for more continuation to the upside on tomorrow. Ooh, this trade ain't looking good at all. I put a limit order down at this is my Leap account too. I'm gonna need y'all to do me some love here. But again, the NASDAQ, unfortunately, unlike the rest of the market, is getting baptized because Elon Musk is an idiot, right? But Tesla is down over the last few days, I think like $150, and it just continues to sell off, right? So the reason why NASDAQ is so effective is because, I mean, Tesla is $1 trillion company inside of a tech heavy ETF, right? So as you can see, NASDAQ is the only one that did not get above previous day high, right? Which is paused the cause a little bit because the rest of the market is trying to push up, but the tech sector is holding the market back. So we'll see if this makes a difference when we do CPI tomorrow. But again, if we look back, I didn't make a plan for the NASDAQ, but if we look back over here, we just started 930. I mean, it did the same thing. 920, 930, bang, straight up. I mean, this thing was on a rocket ship mission, right? Like just straight up higher low and then just straight to the upside. PM session high was hit, but we were unable to break above the previous day high, right? Damn, I'm getting smoked in this trade right now. But anyway, that's really all I got. Like I said, we'll get prepared for CPI tomorrow. I'll do some research later today on the last few CPI reports or whatever and see how it affects the Dow Jones. If you guys are interested in that, just add me in the chat. I'll share my findings with you, kind of like I did for FOMC. But my name is T Hobbs. This is a market review, and we'll catch you on the next one, man. Peace.